haven't gotten an alert yet. And you look like you're.
Yeah,
Yeah, I see you on
I'm
YouTube
going.
Yep,
streaming
you're
now.
Okay.
live.
Okie dokie. So, good morning, everybody. I did update my weekly expected moves and uh, also the daily for next week. Um, if you want them, I guess the weekly expected high is around 430 64. The weekly low is around, that's the second sigma down. Also, it's around 412 and some change. Uh, the double down is 402. Double up high is 440.28. The monthly low, we're gravitating toward it. Just uh, you know, this Thursday when we hit right here, that's where I said at the beginning of the week the weekly expected low for the week was 422. If you would have gotten them in on Tuesday when I bought them, and if you didn't have a senior citizen moment like I did and got out, you would have made, I can't remember what it was, 600-700% on that. So um, that was a pretty good deal. So hence when you get a feel for the market gravitating down um, at the beginning of the week, and it's not that unwise to get, because they're cheap. They're kind of weekly, the weekly lottos, weekly swing. Um, that you would have done quite well. Now overall on this week, um, it looked pretty bad on the. Well, I didn't do the. Well, I guess I did a little bit last night before we got off the week in review and preview for next week. But does anybody want me to go over those right away, or you guys have other
Maybe for
questions?
the newcomers, you could just do a summary
Yeah.
of what you said.
Okay.
Okay.
So guys, what I do pretty much every night, and you should start making this a practice for everyone who's new here. It's really important to get a view of what's going on in the overall market. Okay, to it equips you with giving you ideas of where where we've been, and what might be coming down the pipeline. Not necessarily Monday, but in general, maybe what's coming up here the next week, month. Okay, so um, there are certain what I call indicators. Now, I'm not talking about indicators per se, but the market as an indicator. And what I look at is, what you should be looking at is copper compared to the SPX. Okay, they call this the Dr. Copper. And here we go. So now you could have indicators that give you an idea what copper might be doing. Okay, and then we have copper as a whole. Copper is usually a leading indicator for the market. Sometimes they're very subtle, and sometimes there's uh, bigger changes. Like here, it's just been going down. right? As the market's going up, that's usually a sign that the market will be coming down. And now we started the pattern here. Now, how low we go, I don't know. We're at a double bottom right now here. That's when you start looking at your actual indicators to see what might be going on. We're below the zero on the MACD. If we get a crossover, then we might have bottomed out here, but we broke this trend line to the upside. So uh, we're uh, we're getting into some pretty scary territory if this breaks 3.5. Um, kind of getting into uncharted territory as far as the yearly is concerned. So this is something you want to look at. Okay. Um, and then the next very important one is the dollar, of course. The dollar is a contrarian indicator. So when the dollar goes up, the SPY goes down. Okay, and I was telling people right here for other reasons that I'll show you pretty soon that the market was going to be going down from the New York Stock Exchange McClellan oscillator. And if you notice that the dollar was just kept going up and up and up. Um, and then when we broke this trend line, see the market had a retest here or a back test, but the dollar kept going up. So I was yelling, begging, pleading people, don't be bullish right here. We're going to be coming down, right? And that's exactly what we did, right? Now, these indicators are for the dollar, and right now we're still under this downtrend. So that's telling me that we might be getting close to bottoming out. The dollar is weakening. Okay, it broke this uptrend right here also. We could just be consolidating to break back out. So that's something we have to look out for. But until we break, at least for me, the CCI here, um, we could be getting a back test soon. Again, November is now. Here's another thing that you have to be aware of: is seasonality. Okay, you could look at any stock; they have their best month, their worst month, times of the week, times of the day. Every single hour, they have their big hours and their bullish hours, bearish hours. So on the SPY, their best month of the year is November, and the second best one is, I can't remember offhand. I think April or something like that. So you have to keep that in mind. So this is why when it starts getting lower right here in October. Now we got a couple weeks left here in October, so um, this could continue down, but lower we go. I'm getting the end of the month, November's now. I don't have my chartered market technician license yet, so I'm not a advisor or anything. But so take that in mind. But I'm targeting 455s, and I just got in them. Again, I've been playing them off and on this last couple weeks, and I know I just got back in them. I think at 36. I think. Um, so let me see here. I'm gonna put this down. I'm around 36, something like that. So um, I'm just getting my feet wet on those because November is traditionally, now I'm going with the odds. You always want to go with the odds as a trader. If you have a 70% chance that November is going to be bullish and in October is tanking, you buy low here. If it goes down more, you buy low here. Yep, I'm buying the dips in the downtrend. I understand that, but with the knowledge of knowing she's going to be most likely going up, then we'll go. If we start getting down below these levels, then obviously I'll take my hit. But that's why I'm not going in a lot. I'm just getting my toes wet. So, uh, but the dollar right now is still weakening. So this this is a leading indicator. So we're going down, but on the market. But now the dollar's starting to go down, just like this was going up right here as this was going up. Okay, that's telling you that the market will come down. So now if the dollar starts coming down, even if the market goes down a little bit more, the dollar is telling you that the market's going to start becoming bullish again. Okay, um, so that's a very, very important one. And then you have um, high yield gains, another very, very, very important leading indicator. Okay, so um, this is a little bit more subtle, but uh, you have like right here, right? The market was going up, high yield gains not going higher. That's a subtle deviation to the downside. And sure enough, then we really crashed down here and boom, right? Came back up, but yet lower than this high right here, boom, right? Market going up, uh, but we didn't break this trend line, boom. So we're continuing downward here. So high yield gains is very important. Why? High yield gains, like I explained during the week, I'll make this quick, is kind of like the OTC, right? Very, very, very risky. Well, if the market's going up and a lot of people have confidence in the market overall, what do? They tend to get into more riskier uh, trades. Why? Because they make more money, right? They move a lot more. Well, when they feel that now this is the big boys, in the high yield gains. So if the big boys are going, I'm not, I'm going to get out of my risky stuff because I feel that the market's going to be coming down, right? So that's what leads right here, and that's what tends to show you beforehand what the market overall is going to do, because the big money's getting out of the riskier plays. For just layman terms, that's the way I teach it. So, um, and right now we're still going down, right? And then the indicator, though, we had this. This is a divergence. We're going up here as this was going down. So this divergence played out, right? I told people there's a bullish divergence here. We're going to get a run up in the market, from October 5th, and we had a run up, right? But then right here, we had a divergence going down as the market was going sideways, but that's bearish. And sure enough, we had a run down, run down. But now, if we come down here, this is what I'm going to be looking for to see what happens right here. If we come and bounce down and start coming up again, that might be a sign that we might be finding a bottom. All right. Now that's just projection. This could just keep pummeling, coming down and breaking this and continue down. So, but that's something that I'm looking at. And then I'm not going to get into industrials and transports right now. That's a little bit more tricky to look at, anyways. So, but then the biggest one is the New York Stock Exchange. Okay. This one just never lies. You'll want to look. Now, these are all on the dailies. Okay. These are dailies. Dailies, and you can look them on the weeklies also. All right. But you want to get the McClellan oscillator. This is made specifically for the New York Stock Exchange, and it's never wrong. You don't look at it like an RSI, okay? You play the divergence patterns. So you have to be very, very patient. This took, from October 28th all the way to November 29th. So a whole month, right? You're just watching this. But here, this is going down, that's going up. Guess what? Tank. Okay, there's a bearish or a bullish divergence right here. Run up. Divergence, bearish. Boom. Bullish. Run up. Bearish. Boom. So see how important that is? Extremely important. I I called every single one of these. Every single one of these bottoms. And it's not because I'm just experienced in this how to read these, and you can too. And it doesn't take long just to start looking at, gee, this is going up, that's going down, and boom. So again, right here on the McClellan, we could be coming down here and bounce off that for our bullish divergence. So that's telling me that we should break below 14,934. Okay, so this would set a lower low, but yet this would set a higher high right here, and then we'd be starting to look for more of a bearish move. Now we have kind of more of a complex divergence here, a bearish one right here. So we could be coming back up here from this high right here. If we come back up here, right, say we bounce up, but then we stay below this one and this finishes a little bit higher than this point right here, then we could be coming down again. So that would just be a nice back test and to continue down how this is going, this downtrend. So those are the big ones that you should always be looking at to get a feel for what the market's going to be doing, because you want to be going with the trend. You don't want to be going against it. And that's any stock. All right. So that's it. That's what I look at. That's what I look at every single day at the end of the day. And at the end of the week also. On Saturdays, I'll take a look at these on the weekly also. Seeing where we're at. The 20 is starting to turn over again here. So very, very interesting. I don't really look at the McClellan on the weekly chart, so I'll take more interest in the MACD on this. And here's another divergence pattern right here. So that's it. So with that said, that's our homework. That's what I do, and then obviously my Sigma moves. I have certain levels here where the weekly expected low, weekly expected high, and the doubles right here. Okay, those are all off of the weekly expected moves. Now on Thinkorswim, proprietary, software indicator where it tells you. So I go out to next Friday, the 27th, and that tells me it's the 20. So I'm looking at a 945 move. Okay, so then I'll put that on my chart up above and down below the close of Friday. And then for Mondays, right, I come to Mondays and it tells me we're getting a 441 move. And then I'll double that also. So I believe here's the first sigma. So this is the expected high for Monday. And this would be, if we break that, sometimes we get up to the second sigma. 68% of the time, it's going to stay between the first sigma up and the first sigma down, right? Why is that important? Well, going with the odds, we come up to this sigma right here for the high. I'm 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 going to get short. I'm going to go short, and I'll have my stop loss right above that. Low risk, high reward. I'm 68% of the time. So those odds, anything above 50%, the odds as a trader, that's pretty good. I'm going to go the other way. So uh, that's how. And then of course your channels are very important also. This one broke, so I'm going to take that off. Yeah. So any questions, you guys? Or what do you want to talk about?
Hey Ron, I'm Rich here. Can we go over the fib levels? How you I know you do like the day close and the next day open, I believe. But just to, refresh on that, please.
All right, I go from the 30-minute chart. Okay, so uh, I always do this. I go too far back. Okay, so here's the open for me, 8 o'clock or 8:30. So here's the open, and I'll fib if Thinkorswim allows me. I'll fib from the open to yesterday's close. Okay, what's that? The 4:30 mark. Yep. All right. Now, this when it's super tight like this, I pretty much don't look at it. Okay, but since this is the example, um, boy, it's so tight. It's even hard to get on here. Um, Now the way it goes is I fib from the open to yesterday's close, and this gives me a target, right? Which would be right here. If it breaks above the 38%, then then you fib from there uh, to the previous low. Now this is just ridiculous on this example, but and then after the first 30-minute candle close, whether it's down or up, um, see, this kind of stinks for this strategy when you have a tight range and then you just have a big, massive move because you miss a lot of the move already. Okay, but now once this happens, okay, you're right here at the end of this 30-minute candle. This now it looks a little bit more clear, right? Your 161 is your first target, smashed right through it. Here's your second target, okay, and then here's your third target. Gee, look at that. What a coincidence. It works very good. Um, Now, really, I mean, we had some bouncing around here, um, but here's this is what I call the trend change. Okay, the 38.2. If the 30-minute candle closes above this, okay, and closes above it, you fib from that reversal point back to the low of the day, which would be right here. And then this would give you your reversal targets, okay? So, um, and if I remember right, this technically I think did awfully close. So, that was messing with you right there, right? All right. Um, so that would have been tricky right here. And then obviously, if you did refib, we got close to that first target. So you would have been kind of whipped right here. That would have been kind of tough. Well, this is pre-market. What am I doing? See, it was so tight.
How you doing, man? Got a card?
So
How you
let me
doing?
get that off.
Thank you.
Sorry, I was
You
I
got my
was
card?
getting
What's
distracted.
up? You got the spare? Yeah, yeah. All you need. Okay. 52 chairs, one umbrella.
I don't know why people come in a stream and not pay attention. So, um, but here on the second fib, the first fib, you just have to be patient and wait and see which way this goes, right? But this big target, this gives the indication that there's money coming in to the downside, um, and if you had the nerve to play through that. Okay, now here's the other thing with the strategy is it does quite well if it's just ranging in this area. Okay, so the strategy is, um, here's your reversal. So this is your oh crap level because you could get somewhat risky and get puts when it comes up to here. Okay, but I've plenty of times, after it breaks, this thing rips going the other way and fills the gap, right? So, um, but usually around your 50%, 60, 70% ranges here, 61.8 and 78%. Those are your dip buys. Okay, so you'd be getting puts. A lot of times it will hit the first target, come back up into this range, and then come back down again. And if it's ranging, this is excellent for trading in a range, where trading in a range is pretty difficult. Indicators usually are really bad in ranges. But this strategy is pretty good with that, right? So uh, this just played out great. Now, also, your targets become support and resistance also, right? That's why you come down this first target, comes back up in this area, bounces back down, breaks through, hits the second support,
Oh shit.
broke through, come back
Hindi mo
above
expect
support.
it to command sa mga. Watch it mo. The one time on to nonsense niya kung nang mo.
So we hit right here. If you're really risky, boom, you can come back down and get a play down to the second again, or even you have some runners. Usually, I'll take some out here at the first target a little bit, depending on my trend lines on the smaller charts, and then we could play it down to the second target, and definitely second target. I'm taking some out here, and then possibly adding to my position here, especially when it sets this trend right here, and then you're hitting your third target. Now, the example I gave earlier is kind of difficult to get a grasp of, but let's say, okay, this is the second fib off the second 30-minute, the beginning of the second 30-minute candle. Um, let's say um, the price breaks above the the trend change. Okay, then what I would do is, let's say it came up to here and it broke. The end of the 30-minute candle closed right here. I will. What you do is you fib from that the trend change line, the 38%, right? And you fib back to the previous low, okay, of the day, not pre-market, the previous low. So let's say at the end of this candle, that was the low of the day so far. Okay, so you fib back to the previous low, and these would give you your bullish targets. Okay, sometimes the first target is pretty darn close to where that breaking candle, trend changing breaking candle finished. So it's not a low risk, high reward. It's not that good of a trade, but usually you're playing the dips, so it might come back down into the 50% area, and then you get your calls, and then you can play it up to the first, second, third targets. So that's how that works. So
Got it.
yesterday the opening fib horrible, but after the second fib, um, I mean, it played out beautifully. So it's a very good strategy. It's something I attribute a lot to Connor Polifrone for. And then him and me worked on a strategy together to write a script to have it automatically put on your chart. So it's very good. So that's that.
Is there a specific reason why you use a 38% retrace?
Yeah, the back testing just proves that's where you have high confidence that the trend is changing.
Okay.
Yep. It's like that with just basic Fibonacci. Uh, it's a part of the Fibonacci rules, I guess, if you want to call them rules. But here's the 38% here. Um, Depends on how there's just a bunch of different ways of looking at it. So if traditionally this is the move up, okay, now with fibs, guys, it larger the chart the better. I see guys fibbing on the 1 minute mark, and it's just I won't get into that. So, but the traditional, they call it the golden pocket, the 61 to 78%. This is your reversal area. Okay, so you see a lot of people wanting to start to buy in right here. Personally, I don't use it that way. The fib, if I fib up instead of down, you're looking at retracements of about 50%. 50 to 61% is a sign that the trend still has strength. Okay, because the way I think of it, Starfish, can you mute your mic, please? Um, the way I think of it is this is a marathon, right? So you run a marathon. If it starts continuing up again, it dips and continues up before it hits the 38%. That's like you running a marathon, and then 2 days later you run another one. Well, you're going to be gassed. You're not going to have a lot left. So you usually don't see, if any, that it breaking the next high. But 50%, 50 to 61% area, that's running a marathon, and you have a good 3-4 months off, and you're ready to run another one and do really well, right? And then on the other end of it, if you break the 78% and you're coming down to here, well, that's like you taking a year off, and a year off, you get a little lazy, your discipline is down a little bit, you start eating McDonald's and blah blah blah. Oh, I'm going to run a marathon. Well, you're not going to do well at all, right? So that's how I look at it. Um, if you fib down, which is the way I prefer, okay, here's your 38.2. Okay, so now this is kind of the way of thinking of the opening back test to the yesterday's close idea. Okay, that if it breaks the 38.2%, now we're in a trend change. We're bullish all the way up, and look, see, dip, run up, dip, fighting at this range right here, the 50% range. So this is telling me that we still have a chance for this to be a good dip buy for the bulls. But what happens? Boom. Okay, so this is telling me since October, right? What was this? October 4th, we darn near lost everything from the beginning of the month. So this is telling me right now that we're at least on the 30-minute chart, that we're pretty bearish as far as strictly going by the fibs, right? So that's how you do fibs. Fibs are more important on the bigger charts. Personally, I think they're kind of just, I know they're, with nature and everything, there's certain percentages and everything. I still think they're somewhat random, but since so many people use them, it's kind of self-fulfilling. Now you just use them because so many people do. So that's what I have on the fibs. Oh, excuse me. All right, guys, what else?
Ron,
Ask
this is
questions.
recording, right?
Yes.
Okay, perfect. All right, thank you.
Yep.
Did you want to touch on the Rinkos if no one else has any other questions?
All right, Granny, what do you want to touch on here?
A lot of people were wondering how to set it up. And I didn't know if you wanted to give them a demonstration on how that works for those that don't.
Yeah, in reference, there's wrinkles on Thinkorswim. Okay, so I have my wrinkles set up right here. I have it on 25 ticks. That means every 25 cents it will print another brick. Okay, it's a range candle. So it will not print from here, it will not print another candle until it goes down 25 more cents. It could come down 23 cents and come back up. And then from this point right here, it will not print another candle until it goes down in that 25 cents, or it could come all the way back up here to 25 cents, and then it would print a blue candle right here. It could literally go down 23 cents, come back up, go up 23 cents, go back down, and what's happening here is just doing nothing. And if you're ranging, let's say this is a $2 Rinko bar, it could go up $1.75, come down to where you were at, and go down $1.75, and just is. I've seen on the bigger candles, literally for 2 hours and not print one candle, right? So, but that's the idea. Um, on Thinkorswim. Now we've been having people wanting to um,
Even have a job, so like I don't know why she's not going.
I know.
A real job, you know.
Yeah.
so um,
But what
people, we are live.
cities?
Yeah.
So all right. So on Renko on Trading View, we've had a lot of people that want to get the Trading View version, um, and basically it's pretty simple to set up. You just come to your candles right here, and you pick Renko. Okay. And then you get the Renko bars on here. Now the nice thing about Renko on TradingView is that you have bottoming tails. You will not get that on Thinkorswim. The importance of that is it shows you pressure, right? So you have a big bottoming tail here that's showing you that bulls are stepping in. There's a lot of buying pressure. Vice versa, right here you get a big topping tail that's starting to show that you're getting selling pressure. So that's the nice thing about that. And now we have a certain setup that we've been looking at that I like. It has now these are like fancy Bollinger Bands. I really like them. They're from Lux Algo Signals and Overlays. And then these dotted lines here change a character, break a structure. These are off of the price action concepts of Lux Algo also. You don't need them, but to, here, I'll just hide these for right now. Okay. We have a pretty decent system here that I'm starting to like. I'm still messing with the 15 and the 5 and the 3. 15 is really looks like it's really good for swings, and for scalping I've been back testing using the 5, not the 3, the 5 and the 1 and the 3 and the 1. Okay. That combined with this called Order Block Finder, and you could go on more and come down to about the script, and you can read about it and learn how how you use it, how you could set it up. But it gives you the bullish and the bearish order blocks. And now everything looks perfect after the fact. Okay, some of these don't print until a little bit farther down, so you have to tinker with the settings with this. So on the 1 minute, I do like it on the 1. Okay, but the 5 and the 15, I would set it to 2 or 3 right now. That's the way I'm looking at it. Else it just gives you more noise. Okay. And then with that, we have the smooth shandy trend with signal line. And with that one, I think we pretty much just have the defaults in here, if I remember. And
Yeah, we do.
yeah, so this is a trend indicator. Okay, so along with the trend indicators, it's kind of along the line of moving averages, your parabolic SAR, your MACD, Keltner clouds. Okay, But with the Renko, this does pretty good, really good. So how it's read is it's not like a RSI. Oh, we're overbought. I'm getting out. Okay. This is signal. This is trend strength. So if you're down here, okay, the dark red is very strong. The lighter red is strong, and same with the green. The green is a strong uptrend, and the lighter green here is very strong uptrend. So if you're like here, this 15-minute trend right here, okay, um, and you do that in correlation with your order blocks, you have a bearish order block here, but as long as this stays in the very strong, you're considering this as just a pullback to mediate right here and continue upward, right? So it's right here you might come down, but now here you might you might have gotten out right here because you're seeing that the trend is weakening, right? So so that's how we look at it. I haven't really looked at it too much, studying it from the 15-minute chart per se. Then uh, this this run was good, but no matter what, when you're ranging like right here, you're you know you're trusting. Oh, this is this is the beginning of a big downtrend right here. We're trending down. All of a sudden, you get whipped, right? So, but from here, you obviously have a downtrend, and then right here, everything is still going down. So you're trusting that this is just a back test for a next, larger move down. And you could have been in this since October 19th, what was that, Thursday, all the way through Friday. And again, bigger the charts, bigger the moves. So you could have gotten in 431s. Matter of fact, that's when I got into the 422s. And look at that. Huge move down. So that's how you play it, right? So and then I think right now, here's my other chart. This is the 5-minute. Okay, so here was yesterday's. So we have a bearish trend. So you don't want to be contrary to the trend. You wait for a bullish order block right here. You get in, boom, that big move all the way from 426 down to 422, a $4 move right there. All right, here, bullish order block, but now the trend is coming up. So you probably would really, you're in the middle of the trend right here, or in a range. You're going up. If you want, you could scalp this, but overall, we're in a bearish trend, overall trend. So what do? I would prefer to wait until we're in the strong trend here, and you get a bearish order block in a strong trend. Yes, I know that just is the exact opposite of what I said, but now you're looking at the overall move. All right, you get a bearish order block, boom. Or if you prefer to be very conservative, nothing wrong with that. You wait for the crossover right here, right? And you get in here at 423.22, at 115. Your target would be this order block right here. Way too far back to see where the actual point of interest is. You have to go on the 15-minute chart to look at that. And you would have made this whole move right here. So it's a uh, really good system. Now I personally use Bollinger, they're fancy Bollinger bands again, like I said before on Luxalgo, because this is trend. This is a different indicator. You don't want to have three, four indicators that are all the same, like all trend indicators or all momentum indicators or volume. You want to have one of each or just one or two from the different categories. So the Bollinger Bands is volatility. Okay, so they're basically like two deviations out from the average. So when you start getting deep into the second deviation down here, um, again, 85% of the time it's going to stay within the second deviation. So you get a bullish OB, that might be a good scalp right here, even though we're in a strong downtrend, right? Or you wait for it to get in the middle of the Bollinger Bands again. You see a downward trend, boom, you're bearish. It's very important to mix up your indicators if you use them, right? Because otherwise, if you have three different indicators of the same kind, they're all telling you the same thing. They just look different. They're not giving you any different information at all. That's very important. But that's how we're playing the Renkos. Beauty of Renko again is just look. It just shows you the momentum. It's very, very good. It keeps you from getting stopped out, unless you have three different. You have a 5 minute and a 3 minute and 1 minute, and you see the 1 minute going up, and you're like, oh, I'm gonna get out. So to fight that temptation, you go to the bigger. You just stay away from the smaller ones, unless you're micro scalp. If you're scalping, and you just want a 5%, 10% type of run, then look at the 1 minute. Me personally, I haven't looked at this, back tested it enough yet to see what would be my best play. I like the bigger moves. 10-20% is nice, and there's nothing wrong with that. But I'm trying to find something that will signify, a 10 to 1 risk to reward, right? Where I'm risking $100 and I'll make 1,000, or $10 and make 100, right? But that's just who I am. I have more of a laid back disposition. I don't get easily scared out of stuff. Obviously, no one's perfect. I definitely have. I definitely have. Friday, I got spooked on the 1 minute and got out, and it cost me a lot bigger of a run, right? So it happens. But if you're more skittish and you don't look at you're afraid of losing the potential money that you can make, then you might want to be a little bit more on the scalpy side and play the 3 minute and maybe the 1 minute, or the 5 and 1 minute, right? So now obviously if you're playing the 15 and the 30, you're not intraday scalping, right? Those are for longer swings. The 3 minute and the 1 minute, or the 5 and the 1, then you're looking at longer, especially the 5 and the 1, you're looking at longer intraday type of plays. 3 minute to 1 minute, you're playing more of a scalp in between, maybe 1-2 hour, maybe a 1 hour scalp or 30-minute scalp. So like this move on Thursday, right? It was 12:05 for me, 12:05 all the way down to, it was 240, right on the 5 minute chart. On the 1 minute chart on Thursday, and get back that far. Oh, never mind. You could just see how much, right? You're scalping. That'd have been a really good move here. Um, but on the 5 minute chart, it might take you down to here. But yep, you'd be down, you'd be up a lot here, and then you might be up 400% here, and now you're only up 100%, right? Right here, you might only be up 70% because of theta, but then boom, right? It depends on how you look at it, and sometimes you end up. Here's the thing with let's say this is the 5 minute. You might be up 400% here, and then it ranges the rest of the day, and you still finish lower on the chart, right? On the 5 minute down here. But because the volatility, you might be up 400% here, and here you're only up 200%. So those are things you always have to keep in mind. This is what I call a rip and range. It just rips, and then you just watch your the premium burn. So that's why scalpers like to you get that big volatile run, boom, you're out. Okay, so there's wisdom in both. In short scalping, you get that big volatile move, I'm out. I made my 200%, I'm happy, or my 400%, I'm happy. And the longer range players, intraday, I'm talking about, nope, I'm still in it. Oh, I'm only up 200% here. And the scalper's going, see, you should have gotten out. I was up 400. But sometimes when you stay in it long enough, then you get your bigger move to the downside. And these guys are up 1,000%, 1,500%. So there's always that. Higher risk, higher reward, right? You're playing longer ranges intraday. You're going to have ups and downs, and that's determined by your disposition. If you don't mind, it doesn't freak you out when you're up 400 and now you're only up 100, where other people are like, I'm up 400. Oh no, 380%. I lost 20%, and then they get out, and then it tanks again. So you have to find out that. That's what I always try to drill into people's heads is the most important thing about trading. Obviously, well, understanding that how to read a chart, market structure, right? But above that is knowing who you are as a trader. And that sometimes takes a long time to figure out. And if you only do one type of trading, like intraday trading, you might not know it, but you might actually be a better swing trader. Because man, I stay in these trades too long, and I lose money intraday trading, and that could be because, well, you have a disposition where you don't mind the bigger swings up, and so you might be a better swing trader playing from bigger charts, the 15-minute chart, the 30-minute chart, and sticking with it longer, or vice versa. You're swing trading and you get nervous and you get out and it just keeps going up. You're a little bit more skittish. That's a little bit more on the intraday trading, where you have to really have control, and you're worried about every single percentage, right? Then you might want to be a scalper with the intraday trading. Once you find that out, then what kind of person you are as a trader, and usually it's like that in life. If you're more laid back and you're like a type B person, you don't have I don't know, you're just more laid back. You don't mind the dishes being dirty in the sink for a day versus 5 minutes. You might be more of a swing trader. or having longer swings intraday. Where if you're more of a type A person, you need to be in control and micromanage, then you're looking at, you know, ultra scalping, or, you know, scalping on the 1 minute chart versus the 5 minute chart, 15-minute chart. Make sense?
Ron. Oh yeah, it does.
All right.
Uh, So Ron, do you have a specific name for the Bollinger Band indicator that you use in TradingView?
Well, that's a part of the Lux Algo signals and overlays. That's a premium package. So it comes with the
Okay, I
premium.
see.
Yeah, if you get the Lux Algo premium package, you get it all. You get the price action concepts, you get the signals and overlays. Um, yeah. So, and I like that because it has uh, more market structure breakdown on it. So uh, this is what I have right here. This is a trend line that I'm just messing with. Um, but then it does have buy and sell signals too. I don't use those on the 5 minute. I use those more on the 15. It also works very well on the 1 minute, but it gives you your order blocks. But for me, I use it for this up here, which is, it tells me right now we're on the 1 day, the 4 day, 1 hour, 15 minute, uh, the market structure. Okay, and I don't have to go to the 1 day to see, oh, what are we doing on the 1 day? What are we doing on the 4 hour? I just have it all right there, right? So typically, what happens, you wait. If we're in a bullish, or if we're in a bearish market structure, here we have a change of character, right? Change of character means you're getting lower. In a bearish move, you're getting higher highs, higher lows. One higher high and one higher low. That's a change of character, right? Typically, that is a mitigation for the continuation of the overall trend, which is bearish. So what does that tell you? That tells you that this is a dip buy right here for puts, right? Now, it's always potential that a change of character can, you lucked out, and this just happens to be the change of character in a downtrend. That's the beginning of the uptrend on your 15-minute chart. Okay, but odds are, right, it's just a mitigation here. I don't have my thing up. Get my pointer up here. So here's the downward move. From this downward move up. So here's the, this is, in order for this to continue downward, it's, you have to have a back test and at least touch that lower area, which is also the pre-market high and low, which is always important to see what's going on pre-market. After it hits that, boom, change of character. Now, change of character right here in an overall bearish market tells you what? That we're beginning to have the next move down.
And the Lux algo overlays have all this preset where the market structure, I mean, like the default settings got that, or you have to
Yeah,
manually set it.
they're automatically set, but you could change them. There's all kinds of
Okay.
really awesome parameters. You could, like, I have this set for the chart, okay, but you can come down here and time frame chart. So this is all the action going on the 5 minute. But I could change that. Let's say I don't want it. I want on the 5 minute chart, I want to see what's going on the 15-minute chart. All right. That didn't change much. Oh, I still have, okay, this is what I wanted right here. What, la, la, la. Your highs and lows and everything. Let's go out to the 1 hour chart. Okay, now see, a lot of the highs and lows were taken away. And this is what it's looking like on the 1 hour chart. Okay, so here I'm in the Bollinger Bands. I got a higher low right here, but yet I got a lower high. But now we have a higher high, lower low, lower high. Okay, so what does that mean? We're in a range right here. And we're continuing downward. On the 1 hour chart, see, we're on the 5 minute right here, but look at this, a break of structure on the 1 hour chart. What does that tell you? Bearish, boom. So it depends on how you want to look at that. So traditionally, you either scalp, so you go from the, like on the 1 minute chart, you'd have the 15-minute chart overlays. That's giving you a 15-to-1 risk reward. Or you do the 4 hour and the 15, where you have the 15-minute chart up, but yet you have the 4 hour market structure up. And those would be for your longer scalps. So that's how that's set up. Right now I have 3 different screens up of this with Lux Algo on. So since I have chart up, I have my 5 minute information on here, and then I have my 15-minute also on. So I don't need to have that overlay on here. Plus I have this that I'm looking at anyways. So
All right, thank you.
yep. Let's see, what time is it here? I got around 15 more minutes. So
Hey Ronbo, this is Aladdin. Hey, I
Aladdin,
know
what's
this
up?
might, yeah, so this might be an ask because I typically get into, I guess sometimes I get into a good play, but I just don't stay long enough, and I'm having a hard time creating these trend lines. Any tips on how I should be creating these trend lines? Should I be creating these on the 15-minute mark, 30 minutes mark, and maybe I'm just drawing these trend lines wrong.
Yeah, if you notice, look at all of mine. Right, different
Right,
colors, different. Okay, so, but now I have channels. And sometimes when I'm scoping, I'll just do that would be my stop loss trend line. Okay, channels are a little
right,
different. If you have a downtrend, right? So this would be your trend line going down. I
right,
make a channel though. So here's the recent move to make that high. So that's the bottom of my channel right here. So this is not a trend line, it's a channel line. This is the trend line. Okay? But this is the
right,
channel. So now yellow, this is the way I have it set up. Yellow is my 30-minute, right? So I do them on all of them. Now when I'm intraday trading on the 1 minute or the 5 minute, I have blue is bullish and orange is yellow. Okay. And
Okay.
so they'll be all within this 15-minute channel right here. But the 30-minute, here's my 30, this is the recent move. You're only doing the recent move on the chart. So this is the 30-minute chart. Here's the recent move. So here's my, here we're going down.
Right.
Okay,
Right.
now on the 15-minute chart, here's my purple, that's 15 minutes. This is the channel.
Okay.
And then you could go to the 4-hour chart. Okay, now on my 4-hour chart, I had this recent move up. So here's the two, this sets my
Right.
trend, and here's the move down. Okay, now you actually could have had this way, back here, or actually right here. Huge range. Why? It's a big move, right?
Right.
Well, once we came up here and set a higher low, I moved this trend line to right here. The trend hasn't changed, not my trend line, my channel line. Okay, so here was my trend on the 4-hour. Now we broke that. Okay, so now I could possibly start to think about changing my 4-hour because it broke.
Right.
Okay, so my 4-hour, actually, I'll probably, and I do this on Saturdays, will be right here and right here. That's what it's going to look like, my new 4-hour chart.
Right. Okay.
Okay. And that, what does that tells you a lot of things. Okay, 4 hours going up, 15's going up, 30 minutes going up, but then what happens? The 15 changes, starts going down. Okay, so what? That's just a back test. But then it breaks the 30 minutes. So now you have to change the 30-minute channel. So now not only the 15's going down, but now the 30's going down. So that's
Right.
tipping you off that the move is getting bigger on the bigger chart, right? Well, now your 4-hour was going up, but now, now I got to change the 4 hours. So that means the move is getting stronger to the downside, right?
Got it.
That's what helps you out. And now the red channel, this is my daily channel.
Okay.
On the daily chart. So this kind of faked out a lot of people right here. Why? Hit the top of the channel, bottom of the channel. What do you think? Top of the channel. Nope, didn't happen. Didn't go there. Okay, so that tells me on the daily we're losing bullish momentum. So here's the daily. Here's the move since when I called it right here. 3 days before the 31st, I said we're going to start going down. Boom. Why? Not because I'm so smart. It's just because that's what the McClellan oscillator was saying on the New York Stock Exchange. And then on the daily, then you go to your weekly. Right? And here's the weekly. Oh, we just broke it.
Right. Okay.
So,
Makes sense.
that's the way that works. And then, of course, the most important thing is your deviations, standard deviations. This is looking really rough. We broke the second again. If you know about deviations, 85% of the times it stays within the second deviation. We have come down to the 2.5 before. It looks like we
Right.
might be trying to do that again. 418. Funny. Where's the daily? Right down here.
Yeah, right on it.
So you're
Okay.
looking for more information you find, the better. It's called concurrence. So there's a strong chance at around 418 that we could get a bounce back up. However, here now you could use the deviations as a like Bollinger Bands. We're going up, we're pinching, and now we're kind of starting to go down a little bit. So
Right.
so now you gotta do a juggling act because November's typically a bullish month. So something's gonna give one way or another. And then on the most important one is the weekly deviations, right? So
Right, right,
the weekly, the white line's your average price. We go up two deviations, 99.9% of the time, it's not going to hit and hold above that. Here we are on the downside. Two deviations, easy to be extremely bullish right here. Bam. Now, most of the time it stays within the first deviation on the weekly, right? Look at all the
right.
time it's spent between these. Came up to the first deviation. We're just coming back down. You're, now it looks like we're now, since this is the most important. There's usually a lot of fighting going on here. There wasn't any right here, right? We got close to it, came down,
Right.
and then we smashed right through it. I wouldn't be see. So there's been ranging going on here, because market's going. Are we going to push up, or now if we break through? Usually these act as magnets. So then we'll, to keep the average, right? What happens if it goes down -1? Well, we got to keep the average. So we go to +1. We're at +1. Now we got to go down to -1, right? So,
Right.
so from the deviation standpoint, we definitely could be coming back down. Overall, though, negative or +2, -2. We only came to +1 right here. This could just be a back test on our way to push up to +2 again and then break back down. So, well, Ron, is it going to go up or going to go down? That's not a technical analysis job. The analysis job, or the analyst's job, is to give you possibilities. Okay, scenarios aren't certainties, they're just scenarios. If anyone says, "Oh man, we're going down here," no, that's one scenario, right? But we could bounce back off the average and go up. So it's giving you information to help you in a to see where the change might be. So the possibility, if we bounce off the average and continue up, then we're most likely coming up to here and not breaking down to here. So then
Right. Okay.
right? So trend lines, again, very important to have on all your charts. So
Yeah, I think that's what I was doing wrong. I wasn't creating for different time frames. I just do it on the chart that I was looking at. So I wasn't combining different time frames, and that's probably the reason why.
yeah, come to think of it, I don't know why I have my weekly here. Boy, did I get lazy on that. I'm not gonna. All right, so here's my channel for the weekly, and we just smashed right through it, right?
Right.
So notice after we broke it this week, we just crushed. That's a pretty bearish outlook on things. So, but as for right now, I'm keeping this channel on here until I get more information. My daily right now is giving me the information that I need on this leg down here. If we continue downward, then see, I already have this up here. I'll probably change this into the channel would this would be the trend, and then my channel line would be coming down like this, and then the weekly I'll have going down. So that's how you do it. So yeah, on your weekly, you want to have the weekly chart up. I have the 3-year weekly. The daily, 1 year daily. Boom. 15, and then your 1 minute. You know, like right now, it would be kind of a sub channel to this right here. You could do that. Oh, gee, this is getting nasty. You got to get out of there. So, you know, your 1 minute would be coming down here. Oh, and then now it's coming up here. Oh, it broke, and then down here. Right? So
Right.
smaller the aggregation you go, more you're going to change your channels and trend lines. Never have trend lines break. You don't set a trend line like that. Why? Because this broke above it.
Right. Okay.
There's your trend line right there. Here's your range line right there. That's a range. Once it breaks, sometimes you get a false breakout and then it pops back up and goes the other way. A lot of range players look at this because you have your Asian market, your London market, and then once it breaks, retest, boom. But remember,
Cool.
channel lines could break. Okay, your channel line. So here's your trend line, and so here would be your channel line. Now your channel line breaks through all of this. Okay, that doesn't matter. But you can't have a trend line like this. That would be the range. But see, it breaks
Right.
through this move right here. So you know that would be your trend line.
Right.
Because
Okay.
it doesn't break anything. That's the most important thing with trends. Trend lines never break structure. Right? Like, oh, here's my trend line. No, that's your trend line. Or this is your trend line. This is your trend line. That's your support line. Support. Right? So, good question. Important.
Awesome. Thank you.
Yep.
Yep. Thank you.
What else, guys? Feel free to talk. Else it's gonna get boring.
Well, for me, Ron, I just need to keep practicing the fib because I see where on your chart it works most of the time or majority of the time. If you know, in terms of getting that part down, I just need to practice more on the fib for actually the further contracts that I like, the weekly type contracts or so forth.
Yeah. Yes, there's no holy grail, and believe me, it fails. It fails. Well, not really fails. It just it indicates where things could go. And obviously, if
Right.
you want to think of it as failing, that would be it breaking the trend for the trend change at 38%. Well, that doesn't mean it failed. It's just showing you it indicates, oh, the trend is changing. Now, so yeah, it's very, very good. And you can make some monster moves on that if it hits the second, third target, and just breaks away right away. You have a breakout, it breaks down below that first target and keeps going down. Yeah, it's pretty awesome. You use that in combination with your trend line. It doesn't break that trend line. You're going down. And sometimes all you have to do is always you're going to have two fibs from the opening bell candle, the open, and then the open of the second 30-minute candle, or the close of the first 30-minute candle. So you're always going to have two fibs, right? Sometimes 3, 4, sometimes I've 7 fib changes. That's where you're just you give it up, and you're having it's a bad day. Why? Because that means you're having a pretty up and down kind of day. And there's more strategies concerning the fib strategy in my book that I have. Book. It's like 30 pages long. It goes over anchored VWAPs and all that stuff too. Yeah, it's very, very good. There's other things that you could learn from it, like come on, get down there. Okay, I don't. This is just random. Doesn't matter. It's just for example. Okay, so let's say that this move from here down here isn't here. Okay, and so the whole day, it doesn't get down to the first target, comes back up and just kind of does this the rest of the day, right? And then finishes right here. I think Connor backtested it and gave a percentage. I don't know. I don't want to pretend to know, but I know that it's a fair percentage. So a little above 50%, I think. The next day, it's going to gap down and start at that target right there. So on your fib, if you never hit the first target that day, and it does not break above the trend change, there's like a 52%. So it's not a lot. You don't want to bet the house on it, but there's a little bit better than 50% chance that you're going to gap down to that point the next day. So that's another tip that's in my book too. So yeah, so there's a lot more to the strategy. It gets a little bit more complicated, but that's always something to keep in mind.
Okay.
Then one other one that I'll give you. I don't know why I'm giving away my book here for free, but let's say that the fib is here. Okay, right here, and then what happens? We break above this retracement right here. So then we have the market structure change. If we don't break above this one right here, this usually will range the rest of the day between these two marks. That will be your trading range. Most of the time, not all the time, but a lot of the time, those will be your ranges. That's why you see me, if we do get a trend change, and so I have this Fibonacci up now, and I take this one off because this just gets too busy, you'll see me come over here at the 161.8 mark and then I'll change the color to yellow because that's my target color. Right? And sometimes I label it too if I'm not lazy. And then I will remove that first fib, but yet I still have my fib target on here from the original, well, after the second fib before it broke to the north side. So I'll always have that on there to give me a night to remember, oh wait, we have a target down here. So that's another tip. Boy, a lot about fib today. But oh, and funny, you think these sigmas don't mean anything? Here's next week's first sigma, Ghost Wick, right up to 425.29. Very interesting. What a coincidence. And it's also the very top of my 15-minute channel. Ghost wicks are important. They will always get hit. So I see a ghost wick up here. We will go to 425.59. Oh, what, Monday? No, it could be 2 months from now. But they get hit. I showed that as an example, what, yesterday? Right? Here we go. When was this? The 6th of October. Look at that ghost wick right here. Funny, where did we stop today? Right there. And you go back to the larger charts even. Here's that ghost wick again. Hit right there. Ghost wick right here. Boom. Hit. Ghost wick right here. Boom. Hit. I don't know if that was ghost wick or not. So always mark those. They're important. Ghost wick right there, hit.
And they're only pre-market and aftermarket.
Yeah.
Yeah, that's what I noticed when the market closed or before it's open.
Usually right after it closes, it does this. Right after close, within the first 3 minutes after the close, you'll get a ghost wick, if you get one. So with that said, I was messing with the default Shandy momentum oscillator, Granny, on Thinkorswim.
Yeah.
Thinkorswim.
Yeah.
It's very, very good on Thinkorswim on the 4-hour chart. Very good for looking at high trend changes on the 4-hour chart.
Yeah.
So
okay,
very good for bigger swings.
Okay.
And what you do on it, you could set your, lows for pivot points, and look at here, right here.
Okay.
We got a low and we're touching it right now. So if we break below it, we're coming to at least down here. If we break that, we're coming down here. And it's very good at looking at divergences. Very good. Right here, we're going down, where we're coming up here. Look at that. Boom. Here, we're going up and up and up. But what's the Shandy doing? It's tanking. Tanking. Boom. It's
Ronbo,
very, yeah.
I'll wait till you're done, actually.
That's okay. We're pretty much done.
I was just gonna ask you, could you look at the BNS chart for me? Someone was asking me to ask you. It's it's a Bank of Nova Scotia, I think, and it's like at a 10-year low right now, and he's looking to get 2026 calls, and just wanted to know if like you can look at the chart for me.
Yeah.
BNS.TO.
Well, Bank of Nova Scotia, right?
Yeah. There's yeah.
Yeah, this is pretty new. You know what I say? Oh, all-time lows. Well, guess what? That just tells me if we're in the downtrend, we're on the way to zero. Especially with what's going on with the bank market.
Okay.
That's why this is tanking. So as long as it's under a downtrend, I consider it going to zero.
Okay, so he should wait then?
I would wait. Tell him to
Okay.
go. Tell him to go. Okay, if he wants long term, like 2 years out leaps, nothing wrong
Right.
with that. Now, if he's going out to 2026, you know, yeah, this. I mean, you're about at all time lows, but that doesn't
Right.
mean that it is the all time low. That this could keep going down to 33, 30,
Right.
right?
That's what I said too to him.
Yeah, so you want to be patient, especially if 2 years out. Oh my goodness, you could wait a couple more weeks. You want to buy on the uptrend, not on the downtrend, because you don't know where the end of the downtrend is, right? And if they're leaps, they're not cheap, right? But the thing is, it could get a lot cheaper.
Yeah, it's expensive. It's like $1,000 for one contract.
Well, yeah, it's not too bad. So, um,
But it
now,
doesn't show the proper open interest, right? I mean,
Right.
or volume. I mean, there's nothing there
yeah.
when you go so far out. So it's a gamble, $1,000 gamble.
Well, it in a way, but remember, those are leaps. So there's no interest in them now. Why? Because the stock's tanking. And but if you get in, see people that's another thing with me. Oh, there's no volume. I'm not getting into that. That's when you look at the chart and you start seeing it pop up over a trend line, right? Everyone's like, there's no volume. It loses interest in the media and everything. That's how I find a lot of my. If you look at Ronbo's ideas, that's the thing about using scans. You're finding in big breaks in certain charts, and you're in before the volume picks up. You want to be in. A lot of my picks the volume's horrible. Yeah. Well, wait another month when it's up 400%. Guess what? The volume's going to be going through the roof. That's the thing about scanners that go by open interest and volume and things like that. When they hit the scanners, it's basically way past when you should have already been in the play. You want to get in before the FOMO people start coming in. That's why I call those FOMO scanners, because it's too late. Now for scalping, that's another issue. But if you want nice long, 2 year type of plays, that's where you want to be in. You don't want to be in at the very bottom. Well, you do, but you don't know where the bottom is. So you want to be in. Some people, oh, I'm buying the dip. Oh, there's the dip. Oh yeah, well there it is again. Oh, there's another. See, you're getting sucked into, and next thing you know, half your portfolio's gone. I don't need to be in right here. See, it could come down here, break up, come down here, and you're in just about at the same price, a lot of times even cheaper after the break, and then you have a back test down, you're in here, and I'm in, as it starts coming up, I'm in right there. Cheaper, and you're in an uptrend now versus being in on a downtrend. Stupid buying when you're under a downtrend. I don't care about where the low is.
Right. Okay.
Don't care. I
Perfect.
want,
Thank you so much.
yeah, I want a higher high, higher low, higher high, higher low. Boom, you're in. That's the secret right there. Not one higher high and higher low, two. So that move mitigates that move right here, and you're off and running. So yeah, you're welcome. It's tempting. It's tempting to get in right here, and you very well, that could have been a double bottom, and boom, you know, you're off and running. But that's the first mouse. First mouse gets the trap. Second one gets the cheese. So this does look like a you know, a liquidity grab, but it's not. Liquidity, it's got to break that low. It's got to have a one bigger, like you'll see a really big bearish candle, and then you might be off and running on a liquidity grab, right? So like right here, this was liquidity grab right here, came down here, then you had a run up, but guess what? It came back into this right here. This was just mitigating for a bigger move down.
Right.
So yeah, so there's that. Okay, I'm over time here, so I got a lot of yard work to do. It's good talking to you guys. I will see you guys Monday.
All
See you
right,
Monday.
Ron.
All right, bye guys.
Bye, Ron.
Bye.